Today I'm going to be showing you my DeFi bear market strategy and how I plan to still earn passive income during the cryptocurrency bear market. Let's hop right in. So with that being said, the entire crypto market has been crashing down over the past couple days. It's currently valued at $2 trillion. Bitcoin went as low as $49,000 and it's currently sitting at $54,000, whereas Ethereum went as low as $2,100 and is currently sitting at $2,500. Now, with that being said, I know I was personally dollar cost averaging on the way down, and I did make some good buys around the bottom of the market. But with that being said, it's also important to zoom out, right? While Bitcoin might be down 9% today, or even 20% of the past 7 days, let's zoom out and look at the 1-month chart. It still doesn't look good. Over the past 3 months, it also doesn't look good. But when we zoom out and we look at the past year, the charts look very, very, very healthy in my personal opinion. We're not seeing a straight downwards decline in Bitcoin. We're seeing a healthy lower high, lower low trend basically, where we go up, we set our all-time high over here, we set a low, and then we set a lower high, and then we set a lower low, and then we set a lower high. And what we're doing right now is setting a lower low, and then we'll continue on the process. Now, with that being said, I personally think that we're going to be seeing a lot of volatility, but also chop up until the election time in the United States. That's a huge economic factor. It shouldn't have anything to do with economics, but at the same time, people realize that candidates are going to handle the economy differently, basically. Some people are more bullish on one candidate than they are the other, and that ultimately drives the entire crypto market, especially when candidates come out and say that they are bullish on cryptocurrency. Anyways, I want to dive back into the DeFi side of things and talk about a few different strategies that you can implement leading up to election time and leading up until the time where you think that the market is going to start to run again. I personally think that we have another couple months of this, and then we're going to start to see some good price action. So my personal strategy would be to yield farm with stablecoins, yield farm with market neutral positions, as well as a portion of my portfolio allocated to the market and have market exposure while still having hodls on the side. And then take all the earnings that I get and compound it back into hodling assets or compound it back into assets that have market exposure that are in liquidity pools or in DeFi passive income positions. But the first thing that I'm going to do to find those different stablecoin positions is going to be to head over to DeFi Llama. And under DeFi Llama, when we go over to the yield section, you'll be able to see the delta neutral, the long short, as well as the stablecoin pools section. So I want to start under delta neutral. This is essentially showing us strategies that we can borrow against our assets on and then go and yield farm with stablecoins. So for example, I'm taking a look over here at a random one over on Radiant. We haven't really refined the parameters, do keep that in mind, but it's basically saying we can lend Bitcoin as collateral on Radiant, and that earns roughly 0.31%. And if we borrow USDC against wrap Bitcoin with a max loan to value ratio of 70%, paying a borrow APY of negative 14%, then we can farm with USDC over on Yearn Finance, which is about 585% APY, which is pretty solid. But remember, we need to make sure that those returns are going to be legit, and we need to make sure that those returns are going to stay stable, because we don't want to be rebalancing our position constantly. So the first thing that I'm going to do is I'm going to select the chains that I want to be on, which is Ethereum, as well as the Solana network, Arbitrum network, Polygon network, Optimism network, and Base network. As far as lending protocols go, I'm just going to keep them all selected for now. Farm protocols, once again, I'm going to keep them all selected. Under attributes, we're going to exclude bad debt and exclude deposit lockups, because remember, if our strategy is to get back into the market before we see a pretty big run in the market, then we don't want to be locked up in a specific position. And as far as TVL goes, I'm going to put stuff at $10 million plus TVL basically. And the reason why I do that is because I want to filter out a lot of that high yield stuff that doesn't really look accurate. Now, just like that, I got a couple different strategies. So for example, we have this Morpho strategy where we can essentially lend TBTC USDC as collateral on Morpho Blue, and that earns roughly 30% right now. And then we could borrow wrap staked ETH, wrap Bitcoin against our TBTC USDC, and that's with a max loan to value ratio of 77%. We would swap the wrap staked ETH, wrap Bitcoin for ETH, and we would farm the ETH on InstaDApp, which earns about 44%. Remember, that's not just a stablecoin strategy, but that's rather just essentially using our initial collateral and balancing out our delta basically. Because if we're lending Bitcoin to USDC, and then we're borrowing Ethereum Bitcoin basically, and then we're swapping our Ethereum Bitcoin for Ethereum, we're effectively creating that short on Bitcoin, keeping the long on Ethereum, and we're balancing out our delta, and we're farming with that Ethereum. Now, if you don't want to do complex positions like that, you could just borrow against your stablecoins by selecting all USD stablecoins, and then where it says percent of max LTV, I would personally be comfortable using about 50%, because remember, if we do see a big rundown, we don't want to get liquidated on lending and borrowing markets. We don't want to be over leveraged. And there's some strategies up here at the top doing about 18% APY, which don't look too bad whatsoever. This is using relative relatively blue chip platforms as well. But that's going to wrap it up for the delta neutral section. The next thing I'm going to do is head over to long short strategies. This is basically strategies where we can go long on a specific asset, short that same exact asset, and then essentially we are market neutral. Basically it's long short. So I'm just going to put in a couple assets that I wouldn't mind doing this with. So I'm going to put in Ethereum as well as Bitcoin. I could also put in Sol if I want to. That just gives me a couple different options. And if we sort by APY, you can see we have some super high APY stuff. Once again, we want to do the TVL. Let's just say above $2.5 million because I do want a decent amount of options over here. And then if we take a look over here, we could go long on ETH and we can go short on Bitcoin USDT over on Binance. And basically how that works is we'd be getting paid a funding rate of roughly 6% or so. And at the same time, we would be getting a good return over on Instadap, which is about 44% right now. And that balances out to roughly 50% APY. And if you use leverage over on Binance when you are shorting Bitcoin, then you'll be able to allocate more towards your long, which will boost up that APY. And the reason why that keeps you market neutral is because when your long makes 10 bucks, let's just say, your short is going to lose 10 bucks. It's just what we're hoping is that the long APY is going to outweigh the funding rate, because the funding rate can also go negative for you. You can end up paying the funding rate as well. And then of course we have the basic stablecoin pools, and I'm going to dive more into the stablecoin strategies because I don't want to dive too deep into delta neutral and long short strategies because those are more complex, and I really recommend you have really good education on those types of strategies before executing them. Now with that being said, in our legacy program, we just hosted a private AMA with the team over at Radium where they revealed a lot of different stablecoin strategies. So that's one of the platforms that I'm going to be taking a look at when I'm looking for these different stablecoin strategies. I want to make sure to keep my eye on Radium because I know that there's some strategies that are doing upwards near 30-40% APR on USDC, USDT. And while we're on the topic of education in our legacy program, my legacy program is built for those that are truly looking to change their financial future and create their own DeFi legacy. In my legacy program, I essentially help you implement my 5-step strategy for earning passive income through decentralized finance and on your already existing crypto assets. We work with 10 people per month, and over the past 18 months, we've worked with over 140 different people, filling up nearly every single month. And if you guys are interested in applying to join my legacy program and potentially working one-on-one with me, then make sure to head over to the link down below in the description, watch this short 20-minute video that reveals my exact strategy, and you can go ahead and hit that apply button if you seem interested. With that being said, once again, I want to dive into the stablecoin pools, so it's time to put some filters over here. The first thing that I'm going to do is look at stuff that includes USDC because I want USDC exposure. USDC is by far my favorite stablecoin when it comes to decentralized finance stablecoins and even centralized stablecoins because they are centralized. Do keep that in mind. But they also have a huge use case in DeFi. And as far as chains go, once again, I'm going to select the ones that I selected earlier, which is going to be Ethereum, Solana, Arbitrum. We're going to dive into Polygon as well as Base and of course Optimism. Those are my go-tos. And as far as project goes, I'm just going to go ahead and keep all these selected. I don't really care which project it is on because once again, I could balance the risk to reward ratio. As far as category goes, we're not going to adjust anything there. TVL, we will definitely adjust to $1 million plus because we want to look at stuff that has above $1 million in TVL, and also that narrows down the amount of pools that we have. And then as far as APY, I'm going to do above 8%. So off the bat, you're going to notice that I have roughly 80 different options. So that narrows it down to a good amount of options. First thing that we could do over on Uniswap V3, DAI to USDC. So this is on the Ethereum network. It's showing about an 8% APY, and that is very, very solid for DAI to USDC. If we open up this chart, you can see that recently just skyrocketed, and that's because there's a lot of trading activity for cryptocurrency stablecoins right now. And if we want to, since that one is a concentrated liquidity pool over on Uniswap V3, we could go over to Metrics Finance and enter in USDC as well as DAI, and then we could start to backtest the results over the past month and see how well that's really going to hold up. Now that being said, I've already inputted the range over here that DeFi Llama uses, which is plus 0.01%, minus 0.01%, and it's showing an APR of roughly 1.13%, which tells me that this isn't going to be the best pool because it's not going to be consistent. Now you can see volume recently jumped on this pool, which is why if we were to zoom into the past day, it's doing roughly 16% APR, but if we were to zoom out to 30 days, it is not doing that nearly as much. So we could go ahead and scratch that one off the list. We could also dive into this Fluid position. Fluid is a product by Instadap with a $300 million TVL. And I would say this is a pretty solid position, doing about 13% APY. Remember, just make sure that's going to be consistent. You can see USDC to USDT is doing about 39% APY over here. Once again, we could have the same exact issue as we had with DAI because typically the APY is about 1, 2, 3%, 5% even sometimes. But again, check that one out. Dola to USDC. This is by far one that I will definitely include in the portfolio because Aerodrome pays out in Aero tokens, but we can use a platform like Beefy Finance to automatically compound those Aero tokens, and then every single week we could just withdraw what was compounded and then put that into something like Ethereum, Bitcoin, or Solana token. Because remember, if our strategy is to build up our overall position in those assets, then of course we would want to make sure that we are withdrawing that capital. I'd also take a look over at USDZ. Remember, you just want to make sure that you're doing due diligence on these stablecoins to make sure that they actually have good collateral and these stablecoins aren't going to end up getting depegged. Now I'm going to up that APY parameter to something like 25% so I could get a couple more options over here in terms of stuff that's paying out high returns. Now obviously we have the USDZ to USDC with the $28 million TVL, but if we go down even further, you'll see that there's some other opportunities over here like on Advantis as well as over on Aura. These are doing 45%, 35%. This one includes Go, which is OBS stablecoin. There's also some strategies over on Pendle where we could lock in a fixed APY of 25% on GUSDC. It's just always important to do your own due diligence on these assets to make sure that they are solid stablecoins before investing into them. Now in my next video, I'm going to be revealing exactly what I'm doing right now with my DeFi positions. And if you guys are ready for that video, make sure to drop a like and subscribe, notifications turned on. Remember, if you're interested in learning from me directly and me helping you personally with your DeFi portfolio, then make sure to check out the legacy link down below in the description. I'll see you guys later and peace out.